and welcome to Startup Street. I'm Ritu Singh and with me is Shruti Mishra from the Mumbai studio. Here are the key headlines from the startup world that we're tracking today. PhonePe gets an additional $100 million from General Atlantic as part of its ongoing $1 billion fundraise. With this, the IPO-bound fintech unicorn has raised $850 million this year.
Infinite Uptime, a provider of predictive maintenance solutions for industrial machinery, raises $18.85 million in Series B3 funding round led by Tiger Global. The funds will be used to further strengthen its global market share.
An academy has decided to expedite the vesting period of its ESOPs by 1 year for all of its employees. This is being done to compensate employees who will not be getting cash appraisals this year, CEO Gaurav Bunjal said in an internal Slack communication.
The government has proposed to exclude a host of foreign investors, including sovereign wealth funds and pension funds, from the purview of angel tax. Investments by non-resident investors registered with SEBI will not attract the angel tax.
Meta has been hit by a record $1.3 billion European Union privacy fine and given a deadline to stop shipping users' data to the US after regulators said it failed to protect personal information from prying eyes of American security services, Bloomberg News reported.
Well, those are the headlines we've been tracking for you this evening. Let's start with an exclusive story now. Public transport technology company Chalo has raised $45 million in an equity round led by Avatar Ventures. Existing investor Lightrock, Waterbridge and others also participated. Now, the firm has also raised $12 million in venture debt from Trifecta Capital and Stride Ventures. The company that has so far raised $119 million in funding is valued between $400 to $450 million with this latest round. Joining us now is Mohit Dubey, the co-founder and CEO of Chalo, and my colleague Ritu Singh. Mohit, welcome to Startup Street. Now, before we get to the fundraise, there have been reports that this funding has come as a down round. Can you clarify if this is a down round? And we understand that the valuation stands between $400 to $450 million. Is that correct?
Yeah, you're close on the valuation. That's right.
Close.
And even the last time we raised the money was October 2021 when Lightrock came in the Series C. We did a $40 million odd round then. Since then, company has grown multiple times on every front of the business. You know, we are operationally profitable. We have grown and present in 50 cities, including Manila and Bangkok. And the valuation has only gone up, and significantly for that matter. So I don't know where do you pick this from, whether a down round or so, but that's not at all the case.
Okay, so it's not a down round and we're close to the valuation of $400 to $450 million, apparently correct. But, tell us about this $45 million in equity and $12 million in debt. How do you plan to deploy these funds exactly?
Yeah, so, Chalo has, as I said, right, has been significantly growing, but we still power close to 15,000 buses. India alone has 500,000 buses. We have a presence in almost all large metros. We are present in Bombay, Delhi, Kolkata, and Chennai. And all of these markets are a lot more buses, which, we can really go and significantly improve. Every time Chalo puts the tech in every bus, any bus, it saves a lot of time for the people. To give you an example, today, we save almost 5 lakh man days, of the waiting time at the bus stop. That means if somebody who earns even a 500 rupees a day, and if we save so many man days, they would possibly be saving 25 crore a month, and that's the impact. And this is still scratching the surface. At 15,000 buses out of 500,000, Chalo is really a tiny in overall penetration. So this more money actually help us expand our reach, go and power more buses, help save more people's hassles, time, and money as they take public transport and make it work better.
All right, so expansion and powering more buses are on the cards. Mohit, what are the financials looking like? How was FY23 for the company and what is the road to profitability looking like?
Yeah, Shruti, always focus on these numbers a lot more. What is really more important is that every day on Chalo platform, 6 million tickets are issued, and this number is really large. And I tell you why. At their peak, the ride-hailing companies, which are the pioneer in India. We're doing 1 million tickets, 1 million rides a day, and we are doing 6 million tickets on public transport. The ticket value could be smaller, but doesn't matter. Every time you can power a ride and make it better, make it more hassle-free, I think there's a big value add, and that's what we focus on. The gross ticketing value of all the rides that we do would be close to $300 million. But that's not what we really worry about, right? We want to make sure that we can go and impact not just 6 million rides, but 100 million lives every day over the next couple of years. And Chalo is on a track, to go in the existing market that we operate in. And with few more cities adding to it, actually an international market, we can get to 100,000 buses. And 100,000 buses would mean close to 2.5 billion rides a month. That's what we're looking at, actually, if those numbers help you. Yeah.
Well, 5 billion rides is something, Mohit, but, tell us what next for the company. I mean, Chalo is now a bus ticketing company. EVs are also driving the next phase of growth. What else? I mean, what is a 3 to 5 year vision for the company?
Yeah, so in the cities where we have a reasonably large presence, we also now started offering premium bus service. And Chalo got Shuttle acquired 1.5 years back. And with that, we got an understanding about how premium buses should be run. In Bombay, if you see, we offer a really good airport service. You come out of the airport, you can take a bus and not necessarily a cab, and this bus are really, really good. The buses are, AC, they're electric, a premium quality. The seat of the bus would look better than a premium economy of an airline. And it's a very comfortable ride, for example, at 1/5 of the price that you'll pay for a cab, actually. So the market where we are present in, we'll start offering not just a bus ticketing service for existing buses, but a premium bus service. And similarly, we'll also offer a last mile connectivity, with e-bikes when you come out of the bus. But that's one part of it. But largely, we'll continue to invest into a lot more tech, and making buses so much more different.
Okay.
What I really regret, in general, is that as a humanity, we have invested last 150 years to improve our cars. And we have all kinds of cars. They are fantastic and fascinating. But if we invested the same amount of time, money, energy in improving our public transport, we would have been a very different world today, actually. And cars have eaten up into, all our space,
sure,
all our parking. With limited land that we have, all this is not really good, clean air, environment, all that impact that cars have really caused. So what we think about today is that, how do we really transform the bus? And a lot of this money will also get implemented, also get deployed across improving, the bus itself. So how do we think about it? Bus driver is really empowered. How do we empower the safety? How do we empower a digital transaction? And these kind of things. In India alone, people invest $25 billion in buying bus tickets. And these are for daily commutes and not intercity buses. $25 billion for a daily commute, and the experience is still not great. People have just struggled for change.
Yes.
Everything is cash transaction, and so on. So
absolutely, Mohit. It's a lot of potential there, and we wish you the very best in all your plans, expansion plans, enhancing your tech capabilities and working towards your goal of 100% digitization of buses. Many thanks for joining us on Startup Street today.
Thank you, Ruchi. Thank you, Shruti.
All right, moving on. The Central Board of Direct Taxes expanded its evaluation methodologies under the angel tax provision for foreign investors in startups on Friday. Now, the proposed legislation aims to strengthen India's startup ecosystem by providing more liberty to both resident and non-resident investors, resulting in increased global investment in the domestic market. So how will this impact the startup ecosystem? To answer this question, I'm now joined by Rehan Yarkhan, Managing Partner, Reyes Venture Partners, and Siddarth Paim, Founding Partner, 314 Capital, and Co-Chair Regulatory Affairs Committee at IVCA. Gentlemen, welcome to Startup Street. Siddarth, let me start with you. The exclusions proposed for certain non-resident investors, including sovereign wealth funds and regulated entities, it is a positive move. Does this bring increased funding stability as this opens up opportunities for fundraising for startups?
100%. I think the lack of clarity has actually been very adversarial to the Indian startup system as of now. Investors already taking macro risk, interest rate risk, credit risk, currency risk when they invest into India. Now, having a tax on investments or capital is a risk that I don't think any of them want to take, especially given the macro situation, given how charged it actually is. I think the government's move about exempting the largest funders of the Indian startup ecosystem, your sovereign wealth funds, your larger financial institutions overseas, university endowments and the like is actually good. And even for investors or even for funds, they said broad-based funds with more than 50 investors. Now, the problem actually lies in that classification of broad-based funds with 50 investors. Does this entail that every foreign fund manager has to give his list of investors or LPs to the tax department as well as their commitments, who's done what? Does it actually mean that the ability to actually create SPVs and use blocker vehicles actually goes away? So I think that classification on the investor part is something that is actually created greater amount of ambiguity. The industry is, of course, reaching out to the department to seek clarity, but the greater clarity we get, the earlier we get, the quicker we can go back to the pre-April 1st, 2020 rules, where angel tax only apply to Indian residents and non-resident investments could actually come in, because they provide more than 85% of the funding for Indian startups, and this funding can greatly be alleviated by that, that clarity.
Okay, let me now quickly go to Rehan. Rehan, a welcome move by the startup ecosystem. The proposed norms aim to expand valuation methodologies and eliminate price differentials between resident and non-resident investors. What do you make of this?
Yeah, well, it's a welcome move from the sense that it's better than what it was a few weeks ago, which was worse than what it was a few months ago. But in that sense, so I mean, earlier they just kind of, there was all this ambiguity about what would happen with international investors. And now that these, methodologies have come, and especially the one where they have said that the FMV, the fair market value, can be ascertained based on the investment of, an AIF, right, or one of the other sort of institutional investors. And the angel portion can be linked to that. I thought that made it very simple. Because typically, when the angels invest, they sort of invest along with these rounds. So that makes it easier. Having the multiple ways of ascertaining that valuation, that also makes it easier. This 10% variance makes it easier.
Yes.
So I think it's a way forward. See, the CBDT is obviously concerned about certain things. That's why they've come up with this. But they seem to have now taken the perspective of our community on board, and they've come up with this. So it's a welcome move.
Okay, Siddarth, coming back to you, something that Rehan just mentioned, deeming value at which funds are raised from certain prescribed non-residents as the FMV is an interesting proposition, as it also aligns with the FEMA provisions which permit raising funds from non-residents at a value higher than the certified FMV as per internationally acceptable valuation methodologies. So Siddarth, tell me, how does this further bolster the ecosystem?
I think this is a fantastic move in terms of ease of doing business. India was unique in the sense that we required 3 different valuation certificates by 3 different valuers using 3 different norms for the same transaction involving the same investors in the same company. So I think by actually harmonizing it as of now and allowing for a greater variety of valuation methodologies, along with the 10% variation and the price matching, I think some of the financial engineering that unfortunately had to be undertaken to be compliant with laws will hopefully end up actually going away to a large extent. So it's an easy doing business move. But I think the question now is, what are the valuation methodologies they're going to bring up?
Exactly. Is there any clarity, Siddarth, on the 5 new valuation methods that are being unveiled by CBDT?
Honestly, don't know. Because as an industry as well, especially in the early stage, even noted valuation experts like Damodaran has said, it's impossible to value an early stage venture which doesn't have an operating history and where business can actually change month on month itself. So if the tax department has new ways of actually helping us do our job, I think all of us in the industry are excited to actually see this. But hopefully they do actually align to some of the more internationally accepted valuation methodologies the way RBI does. I think RBI did a fantastic progressive move to actually keep it driven by market forces. If the tax department employs the same, I think we will have harmonization and greater ease of doing business, greater capital flows as well.
Rehan, what do you make of the provision to account for forex fluctuations, bidding processes and economic indicators is a significant step towards managing the unpredictability in the value of unquoted equity shares, especially in this kind of an environment?
Yeah, I mean, I'm glad that they've sort of accommodated for that, because, that eliminates the risk of the taxman, taking a certain strict view, right? So they've kind of put it in here. We'll have to see to what detail they spell it out, because, the risk that you continue running is that your assessing officer at that particular time, disagrees. So, the more black and white this thing is, the better, because as you know, the tax code is implemented through assessing officers and they can all have a different view. So yeah, it's a welcome move that they put that in.
Okay. So that similar question to you, a safe harbor of 10% to provide for variation in value on account of forex fluctuations and, variations in other economic indicators. It's a considered move in these dynamic market conditions. So first, your thoughts on that, and B, in terms of policy asks, is there something that needs to be done further to strengthen the ecosystem?
No, 100%. I think the 10% variation is good because previously what happened is a round ends up taking at least a quarter to close. So people used to get valuation methodologies for a difference of a couple of weeks due to currency variations and the like. 10%, I believe, is sufficient to actually take care of any movements, larger swing movements that may happen during your financial closure period. I think from a larger extent, what the ecosystem would really like to have is to actually have objectivity when it comes to how the assessing officer views this. I do agree with what Rehan said. Even under 56 to 7B or angel tax, it's actually at the discretion of the assessing officer to accept your valuation report or not. Given that sort of unmatched power that the assessing officer still has and continues to have, even under all these particular changes, how would they actually end up looking at some of these new changes that are made? And would that actually change their mind? Is a big question that is yet to actually be answered. So if the CBDT can actually issue operating guidelines of how they should actually take these kind of cases, and the industry, as IBC would love to contribute to that, I think that would go between allaying fear across the industry.
Okay, so again, same question, Rehan. My final question to you, is there something that needs to be done further to strengthen the ecosystem? Also, by when do you see the stress in the ecosystem settling down, funding winter, cost pressures, layoffs? 2023 hasn't been a bouquet of good news so far.
Listen, there are a lot of asks, right? And I think, the big one which Sid and I and everybody at IVCA has been talking about is, enabling the domestic capital ecosystem in order to reduce dependence on the overseas ecosystem, because, then you're sort of, in their boat, and that increases your risk. So, there are a lot of things in there, like everything from tax parity to, getting, insurance company, to invest more, to getting provident funds to invest more.
Sure.
So a lot of these kind of things come under the umbrella of enabling the domestic ecosystem.
Okay.
And, this is a major imperative, and it's getting more and more every time these funding winters come. I think to myself that, hey, if you had a larger domestic ecosystem, this would have, substituted for some of that foreign capital which has evaporated. And that's what you're seeing in the public markets, right? If you see the public markets, what happened was over the last decade, or rather decade and a half, because we had such a robust mutual fund industry and domestic institutional industry, now our markets are quite stable. When foreign investors have been withdrawing, these guys have been buying.
Okay.
And
Rehan,
it's done
I'm
well, right?
so
we
sorry.
need to see that
Yeah, Rehan, I'll have to cut you because we've completely run out of time. But many thanks, both Rehan and Siddarth, for joining us on the show today. It was an absolute pleasure talking to the both of you. With that, it's time for a short break. Up next, Power Your Own Research has secured $4 million in a seed round by Castle Island Ventures. We speak to the co-founder, Krishna Hegde, to understand how the company plans to use these funds. Stay tuned.
welcome back. You're watching Startup Street. Now, digital assets data platform Power Your Own Research, or PYOR, has raised $4 million in funding in a seed round led by Castle Island Ventures and others. The data and insights platform startup was founded by former CoinSwitch employees in 2022, and it plans to use this fresh capital to expand its team, core infrastructure and product platform. To talk to us about the company's plans ahead is Krishna Hegde, who is the co-founder of PYOR, and he'll also tell us about the growth plans for the company. Krishna, thanks very much for your time here on CNBC-TV18. You know, from CoinSwitch now to your new startup PYOR, tell us what you've set out to do with the company and, you know, what is the sort of market gap that you're looking to address with this platform?
Sure. Thanks so much for having me on the show. The four of us who were at CoinSwitch decided that we wanted to build something in the global B2B space because we saw a clear market gap based upon our experience in operating CoinSwitch. What we realized is that information availability in the digital asset space or in the crypto space is not very consistent. So because crypto started off as a retail first asset class, you don't have the same kind of deep data products available which other asset classes provide for institutional investors. And what we are trying to do with PYOR, that's how we pronounce it, is that we said, look, for global institutions who want to invest in digital assets, instead of them spending time in gathering data and verifying data, if we're able to give them a good source of high quality data, that'll enable them to spend their time doing analysis rather than data gathering. And in turn, this will help expand the institutional opportunity for digital assets, including crypto. So what we're building essentially is a data product. Think of it like a Bloomberg or a FactSet or a Capital IQ, what exists in traditional finance. We are doing a similar kind of an exercise for digital assets. That's the kind of core motivation for us in building PYOR.
Well, Krishna, that's very well explained. We look forward to it. But, tell us how you're exactly planning to deploy this $4 million that you've raised in the seed round. This is a largely untapped opportunity because we haven't heard of many data companies in the digital asset space. If you could put a number to it, what is the size of the opportunity as well?
So, the way we're looking at it right now is that digital assets is a very nascent asset class, right? So institutional investors have been investing in digital assets only for the last couple of years. Whereas if you look at other asset classes, like say credit or commodities, etc., you had institutional investors invest in them for multiple decades. Our expectation is that at this point of time, the number of global institutions which already invest in digital assets is probably a couple of hundred. But if you fast forward 5 years or 10 years, every institution which is a global financial institution will have an allocation into digital assets. Just like today, you cannot do asset allocation without having a commodities exposure, a fixed income exposure, and equity exposure. I expect in 5 years' time, every large institution and individuals also will think about a specific allocation to digital assets. And when that happens, we want them to come to PYOR as their go-to data source to be able to analyze and get data and make decisions on what to buy, what to hold, what to sell, etc.
Okay, but Krishna, besides the obvious clients, the institutional investors, the venture capitalists, who else are you going to target, and have you already tapped some of these customers?
Yes. So, the way we look at our customer segment, right, is right now it is between investors like venture capital funds and asset managers, as well as the protocols and the developers themselves. Because what we realize is that anybody who is developing a particular, new product in the digital asset space also is looking for good analytics and a source of truth. So we've got customers both on the protocol side or the, decentralized application side, as well as with regard to funds on the sell side and buy side. Now going forward, we think that this is going to become much deeper, right? So we look at wealth advisors, for example. If you're an HNI and you got deployment right now in multiple asset classes, we expect that crypto and digital assets will be a portion of your investment portfolio. And for that, the wealth advisor would need a particular data source to be able to make the right decisions. And we expect the PYOR data set to be the data source which these advisors will use. So we're looking at the customer segment as being across the board. And again, all of this is going to start off being more US-centric to begin with. So it's not going to be India-focused at all. But over a period of time, I expect that we will be able to offer our services to multiple geographies.
Okay, Krishna, we have very little time left. So if you could quickly tell us about this product that you've launched in the beta version, Terminal, What exactly is it going to do? And, will there be other products in the pipeline now that you've secured your seed funding? What should we expect from the company in the next 5 to 7 years?
Sure. So the way we look at our first product, right, the terminal, is similar to a Bloomberg terminal. That's the reason we call it the terminal as a current working version. And the way it works is it gives you a full set of all digital assets, including Bitcoin, Ethereum, etc. You're able to take a snapshot of it. You're able to look at multiple data sets, whether it is price action, whether it is what's happening with large investors, the activity of investors themselves, what's happening with usage, has the number of actual users changed over time. And the way we look at our responsibility is because we are catering to the institutional investor. The quality of data becomes super important, right? So what we are doing right now is we're running our own nodes for the different blockchains, getting data from the nodes, indexing them, cleaning them up. After cleaning, we offer it on our terminal product. So the idea is if you're looking at any data point on the terminal product, this is triple checked, verified, and you're able to click to source. So just like, for example, in traditional finance, right? What you want is not just the final number, but you also want the footnote. You want the details of how a particular number is arrived at.
Sure.
You want to make adjustments yourself, right? All of that will be possible through our terminal product, which is the initial product we are launching. What we realized in speaking to investors and potential customers is people don't want a single way to access data. It's not just a browser-based tables or charts. They want to be able to access it through APIs. The more technically savvy customers want to be able to write their own queries using SQL and the data. So we're offering all of that in our subsequent products.
Krishna, we're unfortunately completely out of time. We'd love to hear more about the product. It's interesting, what you're building out there, and we wish you all the very best. Thank you for your time here on CNBC-TV18. On that note, we're going to quickly wrap up this show. Thank you for staying with us. Thank you for watching the show. But stay with CNBC-TV18. Your news and updates will continue on the other side. It's a goodbye from Shruti and me.